Today we will preview the UK's upcoming economic data. In today's week ahead video, we'd like to focus on the UK and think about the two main data points coming out this week for UK markets. That will be the Bank of England's interest rate decision on Thursday and also the UK GDP report coming out on Friday. So starting with the Bank of England, and to provide some context around where we are with the bank, interest rates in the UK are currently at 5.25%. And markets aren't really expecting much of a change going forward. To provide the actual numbers, markets are only assigning a 6% probability to any interest rate cut. So markets not expecting any change from the bank. Now, why is that? Well, we can break it into two components. The first being GDP, the second being inflation. So economic growth, we've seen that be better than expected. So if we think back to the Bank of England's own forecast for this quarter, that was only expected to be 0.1%. Markets are thinking actually that number could be closer to 0.4%. And we'll come back to some of those reasons why when we start talking about Friday's UK GDP report. The second part is obviously the inflation dynamics, and the UK is still one of those regions globally that is seeing disinflation really still play through. And just to provide some wider context again, inflation had been 10.1% in March of last year. We're closer to 3.4% now. So clearly that rate of inflation is falling. But what the bank will be keeping an eye on and looking at is shorter term inflation measures that are just starting to reaccelerate slightly, given some of the heavy disinflation that we've seen. So bank will just be vigilant of cutting rates in that backdrop. So moving on into the GDP report and what we can expect to see there. As mentioned earlier, Bank of England had been expecting 0.1%. Markets are thinking closer to 0.4%. Now, why is that? Well, we can think of things like survey data, PMIs. We're seeing those being stronger than expected. So those break the economy into services and manufacturing. Looking at services to begin with, we've seen those numbers show expansionary type figures since November and through to where we are now, whereas manufacturing, we're just starting to see those expansionary figures come through in March. So seeing that economic momentum build. And we're also seeing things like real wages improve. As mentioned, that disinflation theme continues to play out whilst wages remain sticky, meaning consumers have more money to spend. And that's starting to come through in data points like retail sales, where we're starting to see certain months where the data is positive, given the backdrop of having 18 consecutive months of negative retail sales. Now, what does that all mean for the UK? Well, in terms of asset markets, we've seen UK equities reach all-time new highs for the FTSE 100. But as we all know, the FTSE 100 is quite an international index, so it's driven by things outside of the UK. So FTSE 100 has reached an all-time high, but if we look at something like the FTSE 250 as well, that's also reached all-time highs. So FTSE 250 more domestically focused. And the reasons for that are cheaper equity valuations compared to other developed regions such as the US, for example, but also this improving trend that we're seeing in terms of economic data. So thank you for watching today's video, and we'll continue to provide updates throughout the week.